Question 1. Which of the following is a primary purpose of a title insurance policy? A. To guarantee that the property will be free from future legal disputes. B. To provide coverage for any issues that arise after the purchase of the property. C. To protect the lender against losses due to title defects not discovered before closing. D. To ensure that the property will appreciate in value over time. Answer: C. To protect the lender against losses due to title defects not discovered before closing. Explanation: Title insurance primarily protects the lender or property owner from losses due to title defects that were not discovered during the title search before closing. This includes issues such as liens or claims against the property. The title policy covers defects in title that were not previously known or discovered during the examination process, ensuring that the lender is protected from financial loss resulting from such defects. This is in accordance with title insurance policies and endorsements guidelines, specifically focusing on lenders' policies. Options A and B describe functions not covered by title insurance. Option D is unrelated to the purpose of title insurance. Question 2. In Nevada, what is the primary function of a title commitment document? A. To finalize the sale of the property and transfer ownership. B. To outline the conditions that must be met before issuing a title insurance policy. C. To provide a comprehensive list of all property taxes due. D. To serve as a binding agreement for future title insurance policies. Answer: B. To outline the conditions that must be met before issuing a title insurance policy. Explanation: A title commitment, as detailed in Nevada's NRS Chapter 692A, outlines the conditions that must be fulfilled before a title insurance policy can be issued. This document includes a preliminary report of the title search, listing any title defects or issues that must be addressed. It does not finalize the sale or serve as a list of taxes due, nor does it act as a binding agreement for future policies. The title commitment is essential in the underwriting process and ensures that all conditions are met before issuing the final policy. Question 3, scenario-based. Mr. Smith is purchasing a property and the title search reveals a recorded easement on the property that was not disclosed by the seller. The easement affects a portion of the property and could impact its value. What should Mr. Smith do before proceeding with the purchase? A. Proceed with the purchase as the easement does not need to be addressed. B. Request a discount on the purchase price equal to the estimated impact of the easement on the property value. C. Seek legal advice to understand the implications of the easement and determine if it affects the property's marketability. D. Ignore the easement since it is already recorded and cannot be changed. Answer: C. Seek legal advice to understand the implications of the easement and determine if it affects the property's marketability. Explanation: Mr. Smith should seek legal advice to understand the full implications of the recorded easement, including how it may affect the property's value and marketability. A recorded easement is a legally binding right that allows someone to use a portion of the property for a specific purpose. Consulting with a real estate attorney will help Mr. Smith assess whether the easement significantly impacts the property's value or usability and guide him on how to address it before proceeding with the purchase. Option B may be an appropriate course of action, but it is essential to understand the easement's impact fully first. Options A and D are not advisable as they do not address the potential legal and financial implications of the easement. Question 4. What is typically included in a title search procedure? A. Verification of the current owner's identity. B. Examination of property tax records and utility bills. C. Review of all recorded documents related to the property, such as deeds and mortgages. D. Estimation of the property's market value. Answer: C. Review of all recorded documents related to the property, such as deeds and mortgages. Explanation: Title search procedures involve reviewing all recorded documents related to the property, including deeds, mortgages, and any other legal instruments that might affect the title. This review helps identify any potential issues or defects in the title, such as liens, easements, or encumbrances. Option A is not typically part of the title search, but rather part of the overall transaction process. And options B and D are not relevant to title search procedures, which focus on legal documents rather than financial estimates or utility bills. Question 5. Which Nevada regulation governs the licensing requirements for title insurance agents? A. NRS Chapter 686A. Insurance regulations. B. NRS Chapter 690A. Insurance adjusters. C. NRS Chapter 692A. Title insurance. D. NRS Chapter 694A. Insurance producers. Answer: See NRS Chapter 692 of Title Insurance. Explanation: Licensing requirements for title insurance agents in Nevada are governed by NRS Chapter 692A, which specifically addresses title insurance regulations. This chapter includes provisions for the licensing of title insurance agents, including application procedures, qualifications, and continuing education requirements. The other chapters listed pertain to different aspects of insurance and do not specifically address title insurance licensing. Question 6. Which of the following endorsements would provide coverage for zoning issues affecting a property? A. Survey endorsement. B. Zoning endorsement. C. Environmental endorsement. D. Standard coverage endorsement. Answer: B. Zoning endorsement. Explanation: A zoning endorsement provides coverage for zoning issues that may affect a property. This endorsement addresses any discrepancies between the property's actual use and the zoning regulations that apply to it. The survey endorsement typically covers issues related to the property's physical boundaries and encroachments, while the environmental endorsement deals with environmental hazards. The standard coverage endorsement provides basic title coverage but does not specifically address zoning issues. Question 7. When handling escrow funds, which of the following practices is considered a best practice? A. Dispersing funds to parties involved in the transaction without prior verification of all conditions. B. Keeping all escrow funds in a non-interest-bearing account. C. Providing a detailed accounting of all transactions to all parties involved. D. Using escrow funds for personal business expenses if approved by the parties. Correct answer: C. Providing a detailed accounting of all transactions to all parties involved. Explanation: Providing a detailed accounting of all transactions is considered a best practice when handling escrow funds. This practice ensures transparency and accountability, protecting the interest of all parties involved in the transaction. Options A and D are not acceptable practices as they involve improper handling or misuse of escrow funds. Option B is less optimal because interest-bearing accounts are generally preferred for escrow funds to benefit from potential interest earnings. Question 8. If a title insurance policy includes an exception for claims that arise from a survey discrepancy, which endorsement might address this issue? A. Zoning endorsement. B. Survey endorsement. C. Environmental endorsement. D. Title endorsement. Answer: B. Survey endorsement. Explanation: A survey endorsement would address issues related to survey discrepancies. This endorsement covers problems such as encroachments or boundary disputes that arise from differences between the property's legal description and its actual physical boundaries. The zoning endorsement deals with zoning issues, the environmental endorsement covers environmental concerns, and the title endorsement is a general term that does not specifically address survey-related issues. Question 9. What is the role of a title commitment in the title insurance process? A. To provide a final and binding agreement for the sale of the property. B. To outline the terms and conditions that must be satisfied before issuing the final title insurance policy. C. To certify the value of the property being insured. D. To act as a binding contract for future title insurance coverage. Answer: B. To outline the terms and conditions that must be satisfied before issuing the final title insurance policy. Explanation: The title commitment outlines the terms and conditions that must be met before issuing the final title insurance policy. It is a preliminary report that details any issues or requirements that need to be resolved to ensure that the title insurance policy can be issued. It does not serve as a final sales agreement, property valuation, or binding future contract. Question 10. Scenario-based. MS. Johnson is reviewing a title commitment and notices that there is a recorded lien from a previous owner that has not been resolved. What should MS. Johnson do to address this issue before completing the purchase of the property? A. Ignore the lien as it was recorded by a previous owner and does not affect the current transaction. B. Negotiate with the seller to have the lien cleared before closing. C. Proceed with the purchase and deal with the lien after the transaction is complete. D. Ask the title company to exclude the lien from the title insurance coverage. Answer: B. Negotiate with the seller to have the lien cleared before closing. Explanation: MS. Johnson should negotiate with the seller to have the lien cleared before completing the purchase. A recorded lien from a previous owner can affect the current owner's title and could lead to financial liability. It is crucial to resolve such issues before closing to ensure that the property has a clear title. Options A and C are inappropriate as they ignore or delay addressing a significant issue. Option D is not a feasible solution as title insurance does not cover existing liens that are not disclosed or resolved before closing. Question 11. Which of the following is a common title defect that can be discovered during a title search? A. Environmental contamination on the property. B. Unpaid property taxes from previous years. C. A neighbor's encroachment on the property. D. A decline in the market value of the property. Answer: C. A neighbor's encroachment on the property. Explanation: a common title defect discovered during a title search is a neighbor's encroachment on the property. This issue involves physical intrusion, such as a structure or improvement that overlaps onto the property. Environmental contamination and unpaid property taxes are significant issues, but are not typically classified as title defects. A decline in market value does not directly affect the title, but rather the financial valuation of the property. Question 12. What is the primary purpose of title endorsements in a title insurance policy? A. To extend coverage to issues not included in the standard policy. B. To increase the coverage limits of the title insurance policy. C. To provide a guarantee of the property's future value. D. To finalize the sale and transfer of property ownership. Answer: A. To extend coverage to issues not included in the standard policy. Explanation: title endorsements extend coverage to specific issues not covered by the standard title insurance policy. These endorsements address particular concerns such as zoning or survey discrepancies and provide additional protection for the policyholder. Options B, C, and D do not accurately describe the function of endorsements, as they do not increase coverage limits, guarantee future value, or finalize sales. Question 13. According to Nevada regulations, what is required for a title insurance agent to maintain their license? A. Completion of a one-time training program. B. Submission of an annual renewal application and payment of fees. C. Proof of employment with a title insurance company. D. Passing a state board examination every 5 years. Answer: B. Submission of an annual renewal application and payment of fees. Explanation: in Nevada, title insurance agents must submit an annual renewal application and pay the associated fees to maintain their license. This process ensures that agents remain compliant with state regulations and continue to meet licensing requirements. Options A, C, and D do not reflect the ongoing requirements for license maintenance in Nevada. Question 14. When handling escrow funds, which practice is considered an improper use of escrow funds? A. Using funds to cover closing costs before all conditions are met. B. Depositing funds into an interest-bearing account for the benefit of all parties. C. Maintaining detailed records of all transactions and disbursements. D. Allocating funds for personal expenses of the escrow agent if authorized. Answer: D. Allocating funds for personal expenses of the escrow agent if authorized. Explanation: allocating escrow funds for the personal expenses of the escrow agent is considered improper and unethical even if authorized. Escrow funds should be used strictly for their intended purpose related to the transaction and managed with transparency and accountability. Options A, B, and C describe appropriate and ethical practices related to escrow funds. Question 15. Which type of title insurance policy provides protection against unknown title defects and is typically issued to the property owner? A. Lender's policy. B. Standard coverage policy. C. Owner's policy. D. Extended coverage policy. Answer: C. Owner's policy. Explanation: an owner's policy provides protection against unknown title defects that may arise after the purchase of the property. It is designed to cover the property owner's interests. The lender's policy protects the lender's interests, while standard and extended coverage policies offer varying levels of coverage for different issues, with the owner's policy being specifically for the buyer. Question 16. What must a title insurance company do if a title claim is made? A. Immediately pay out the claim without further investigation. B. Conduct an investigation to determine the validity of the claim. C. Reject the claim if it involves a known defect at the time of policy issuance. D. Ignore the claim if it is made more than 1 year after the policy was issued. Answer: B. Conduct an investigation to determine the validity of the claim. Explanation: when a title claim is made, the title insurance company must conduct an investigation to determine the validity of the claim. This process involves reviewing the details of the claim and assessing whether it falls within the coverage of the policy. Options A, C, and D are incorrect because they either bypass proper procedure, involve rejection based on known defects, or dismiss claims based on time. Question 17, scenario-based. Mr. Davis discovers that his title insurance policy has an exception for certain types of liens. He recently found out about a new lien that was not recorded at the time of closing. What should Mr. Davis do in this situation? A. Ignore the new lien as it is not covered by his policy. B. Contact the title insurance company to report the new lien and seek potential coverage. C. Attempt to resolve the lien issue on his own without involving the title insurance company. D. Cancel his title insurance policy and seek a new one. Answer. B. Contact the title insurance company to report the new lien and seek potential coverage. Explanation. Mr. Davis should contact the title insurance company to report the new lien and seek potential coverage. Even though the lien was not recorded at the time of closing, the title insurance company may have provisions or endorsements that could address the issue. Ignoring or cancelling the policy is not advisable, and attempting to resolve the lien independently might not be effective without the insurer's involvement. Question 18. What is the primary benefit of having an extended coverage policy compared to a standard coverage policy? A. It includes coverage for zoning issues and encroachments. B. It guarantees the accuracy of the property's market value. C. It provides automatic coverage for environmental hazards. D. It ensures that all prior claims are resolved before policy issuance. Answer A. It includes coverage for zoning issues and encroachments. Explanation. An extended coverage policy provides additional protection over a standard coverage policy by including coverage for issues such as zoning problems and encroachments. This type of policy offers more comprehensive protection against specific risks that are not covered under a standard policy. Options B, C, and D do not accurately describe the benefits of an extended coverage policy. Question 19. Under Nevada law, what is required for a title insurance company to handle client funds ethically? A. Use client funds to cover administrative expenses if needed. B. Maintain client funds in a separate trust account and provide regular accounting. C. Invest client funds in high-yield securities for additional returns. D. Share client funds with other business entities for operational efficiency. Answer. B. Maintain client funds in a separate trust account and provide regular accounting. Explanation. Nevada law requires title insurance companies to maintain client funds in a separate trust account and provide regular accounting. This practice ensures that client funds are handled ethically and transparently, protecting clients from misuse or mismanagement of their funds. Options A, C, and D are improper uses of client funds and do not align with ethical standards. Question 20. Which of the following would typically not be included in a title commitment? A. A list of recorded liens and encumbrances. B. The terms and conditions for issuing a final title policy. C. An estimate of the property's market value. D. Requirements that must be satisfied before the title insurance policy is issued. Answer. C. An estimate of the property's market value. Explanation. A title commitment does not include an estimate of the property's market value. Instead, it provides information on recorded liens and encumbrances, outlines the terms and conditions for issuing the final policy, and specifies requirements that must be met before the policy is issued. The property's market value is generally not part of the title commitment, but rather determined through an appraisal process. Question 21. In Nevada, what action must a title insurance company take if a title defect is discovered after the issuance of the policy? A. Immediately void the title insurance policy. B. Negotiate a settlement directly with the affected parties. C. Notify the insured party and potentially provide coverage for the defect. D. Revoke the title insurance policy and issue a new one. Answer. C. Notify the insured party and potentially provide coverage for the defect. Explanation. If a title defect is discovered after the issuance of the policy, the title insurance company must notify the insured party and potentially provide coverage for the defect as per the terms outlined in the policy. Immediate voiding or revocation of the policy is not standard practice, and negotiating settlements or issuing new policies are not the correct actions in this scenario. Question 22. Which of the following is a primary function of a title abstract? A. To summarize the history of ownership and legal interests in the property. B. To estimate the current market value of the property. C. To provide a survey of the property's physical boundaries. D. To list potential buyers interested in the property. Answer A. To summarize the history of ownership and legal interests in the property. Explanation. A title abstract summarizes the history of ownership and legal interests in the property, including deeds, mortgages, and other legal instruments. It does not provide an estimate of the property's market value, survey physical boundaries, or list potential buyers. Question 23. What is one key difference between a standard coverage policy and an extended coverage policy? A. Extended coverage policy includes coverage for defects that are not visible on a standard title search. B. Standard coverage policy covers more risks than an extended coverage policy. C. Extended coverage policy excludes coverage for recorded liens. D. Standard coverage policy is more expensive than an extended coverage policy. Answer A. Extended coverage policy includes coverage for defects that are not visible on a standard title search. Explanation. An extended coverage policy includes coverage for defects not visible on a standard title search, such as zoning issues and certain types of fraud. A standard coverage policy generally offers less extensive protection. Options B, C, and D are incorrect as they do not accurately reflect the differences between these policies. Question 24. What is a common reason for a title insurance company to issue a title endorsement? A. To guarantee future appreciation of the property's value. B. To provide additional protection against specific risks or defects not covered in the standard policy. C. To reduce the policy's premium cost by excluding coverage. D. To change the policyholder's legal rights to the property. Answer. B. To provide additional protection against specific risks or defects not covered in the standard policy. Explanation. Title endorsements are issued to provide additional protection against specific risks or defects not covered in the standard policy, such as zoning issues or survey discrepancies. They do not guarantee future appreciation, reduce costs by excluding coverage, or alter legal rights to the property. Question 25. Which of the following best describes a title commitment? A. A formal agreement to ensure the title after the closing of a real estate transaction. B. A preliminary report outlining the conditions and exceptions for issuing a final title policy. C. A binding contract for the sale of the property. D. A document that guarantees the property's market value. Answer. B. A preliminary report outlining the conditions and exceptions for issuing a final title policy. Explanation. A title commitment is a preliminary report that outlines the conditions and exceptions for issuing a final title policy. It details any issues that need to be resolved before the policy can be issued. It is not a formal agreement to ensure the title, a sale contract, or a market value guarantee. Question 26. In title insurance, what is the purpose of a title search? A. To verify the current market value of the property. B. To identify and resolve any existing claims or defects on the property's title. C. To assess the property's physical condition. D. To create a marketing plan for selling the property. Answer. B. To identify and resolve any existing claims or defects on the property's title. Explanation. The purpose of a title search is to identify and resolve any existing claims or defects on the property's title. This search ensures that the title is clear and marketable before the property is sold. It does not involve assessing market value, physical condition, or creating a marketing plan. Question 27. Which regulation governs the licensing requirements for title insurance agents in Nevada? A. NRS Chapter 682A. B. NRS Chapter 692A. C. NRS Chapter 703A. D. NRS Chapter 701A. Answer. B. NRS Chapter 692A. Explanation. NRS Chapter 692A governs the licensing requirements for title insurance agents in Nevada. This regulation includes details on the licensing process, continuing education, and compliance standards. The other chapters listed do not pertain to title insurance licensing. Question 28. What is the primary role of an escrow account in a real estate transaction? A. To manage and disburse funds based on the terms of the transaction. B. To provide a financial guarantee of the property's future value. C. To offer investment opportunities for the transaction funds. D. To handle the legal transfer of property ownership. Answer A. To manage and disburse funds based on the terms of the transaction. Explanation. The primary role of an escrow account is to manage and disburse funds based on the terms of the transaction, ensuring that all conditions are met before the funds are released. It does not guarantee future property value, offer investment opportunities, or handle legal transfers of ownership directly. Question 29. What is a common reason for a title insurance company to exclude coverage from a policy? A. The defect was not recorded at the time of the title search. B. The policyholder failed to pay the premium. C. The defect was disclosed and acknowledged by the insurer prior to policy issuance. D. The property's market value is lower than expected. Answer. C. The defect was disclosed and acknowledged by the insured prior to policy issuance. Explanation. A title insurance company may exclude coverage from a policy if the defect was disclosed and acknowledged by the insured prior to policy issuance. This means the insured is aware of the defect and accepts the associated risk. Failure to pay premiums and market value issues are not valid reasons for coverage exclusions. Question 30. In Nevada, what must title insurance companies do to ensure compliance with consumer protection laws? A. Regularly update their marketing materials to reflect current market conditions. B. Provide clear disclosures and maintain transparency in their dealings with clients. C. Offer discounts on premiums based on the client's financial status. D. Guarantee the property's appreciation in value over the policy term. Answer. B. Provide clear disclosures and maintain transparency in their dealings with clients. Explanation. To ensure compliance with consumer protection laws, title insurance companies must provide clear disclosures and maintain transparency in their dealings with clients. This practice protects consumers from unfair practices and ensures they are fully informed. Options A, C, and D do not address compliance with consumer protection laws directly.